Good evening, everyone. I hope you had a good weekend. It is the Gold, Guts, and Guns Hour here on YouTube and Periscope, live streaming to you from, well, my cave in North Florida. It's Monday, 5/21/2018. There we go. That should be enough. So let's get started and let's figure out what's happening in the world. All right. So while I just check to see if this is going out properly. Good evening, Tillman. How are you, buddy? All right. Awesome. All right. So we'll wait for a couple of seconds for people to get into the chat, and we'll get started. So for those of you who are new to this, coming to this for the first time, you can follow my work over at goldgoatsandguns.com. You can also follow me on steemit at steemit/@goldgoatsandguns, and follow me on Twitter at TFL1728. And if you like what you hear tonight, you can sign up for my service over at Patreon. You can throw a couple dollars at it to just support this and get access to the private blog where I throw out some trade ideas, some investment, a little bit of investment advice. Or you can sign up for the Gold, Goats, and Guns newsletter, which comes out monthly, which is a full portfolio and exclusive commentary on what's happening in the world, in cryptos, commodities, precious metals, and the rest of it. Because tonight's theme, and tonight what we're going to talk about, is the unfolding madness that's happening in the financial markets. I've got a lot to talk about here. The headlines that I've got for tonight has to do with talking about Italy again, and how the Italian coalition is that's come together has really thrown the markets for a loop. It's really causing a lot of ugly unwinding in the sovereign debt markets across Europe, and which is then feeding into dollar strength, which is already here. And that's having a significant effect on emerging markets, especially Turkey. For one, obviously Venezuela. We had elections today, and Trump is doubling down on telling people not to back the bus driver. Maduro. It's pretty crazy the way things are going here. We had Secretary of State Mike Pompeo come out today and give his first speech as Secretary of State. I thought it sounded better in the original Hebrew, but hey. All right. If you have any questions, just drop them in the chat. I will try and make sure that I repeat the question to those on both YouTube and on Periscope, so that y'all know exactly what's actually what I'm actually talking about. All right. So just trying to get an idea of what's going on, because when I do this through Restream, which is awesome, I don't have a good idea of how many or how many are here and how many are still available. I did not watch. I did watch part of the speech. It was he's a terrible public speaker. He's also going to be a terrible Secretary of State, because Trump's foreign policy has turned a corner. There's a great article over, which I don't have a link to in the video description. I'll try and add it after we get done tonight, to the latest article by Alistair Crook over at Strategic Culture Foundation, which really goes over the shift in foreign policy that's occurred in the last, say, 6 to 8 weeks or so, where the change in tone in North Korea has, I think, and he does, and Mr. Crook feels this way, and I happen to agree with him, that the North Korean peace process has more to do with Trump's maximum pressure policy, and we're going to punish North Korea and fire and fury and all this, and it's all nonsense. But they actually believe this crap. It's obvious to me that the people who are running the Trump administration and Trump himself believe that this kind of lack of negotiation is what brought North Korea to the table, because otherwise they wouldn't have acted the way they have over the last 3 or 4 days, where the United States and South Korea were involved in military exercises, which pissed Kim off, and then Trump had to back off, and then he's starting to pull out of the summit, and then there was Bolton out there saying you're going to look like Libya if you don't submit, and then Pompeo's out here this morning basically saying I have a 12-step program for allowing Iran back into the world market. Step 1, do as I say, and steps 2 through 12, see step 1. None of that is going to fly in the long term. But let's talk about Italy before I get off in the weeds on that, reiterating what I've talked about in previous live streams, what I talked about yesterday morning, and what I've talked about over the weekend. What's important to understand is that Italy's new coalition and the framework of their coalition agreement doesn't sound that hostile to the EU, but it really is. And the markets are finally starting to realize that they are headed for a very ugly fight over Italy's debt situation. And so the market is beginning to test the ECB to see if they're truly have everything under control and can keep everything at the zero bound. There was an interesting article today at Zero Hedge by Chris Whalen, who's a guy I have a lot of respect for, but who happens to be too much of a Republican for my taste, and not enough of an Austrian for my taste. Austrian economist, not Austrian as in, Bavaria. Well, not Bavaria, but Austrian, Hungarian Empire, whatever. The Austrian economics, not ethnicity. And that he kept kind of downplaying the real tail risks of what happens as the Italian banking system breaks down under a stronger dollar. And it's revelatory of the normalcy bias of so many market commentators. They're so deep in the weeds of looking at the situation in the markets, be it in Whalen's case, he's a bank balance sheet analyst par excellence. There's very few people in the world who are better at analyzing the solvency of a bank and whatnot than Whalen. He's incredibly good at what he does, but but being that kind of expert also brings a certain amount of myopia. Not saying that I'm not subject to that same type of myopia. I am, but when it comes to talking about these markets, it's like guys like Whalen can't have a lot of influence if they talk in catastrophic terms. The minute they start talking in catastrophic terms is the minute they lose access to platforms like Bloomberg and the Wall Street Journal and everything else, because no one wants to hear that stuff. They don't want to publish that stuff. So he's always got to downplay what he's actually trying to say. But if you read carefully what he was talking about in the article today, which again is a little technical, but every once in a while you get a good technical financial article on Zero Hedge, you should treasure it because they're few and far between today. I'm not even that technical a writer. When I get scraped to Zero Hedge, I try to keep it in mostly layman's terms, even if I do understand most of the heavy technical jargon, because that's kind of the way I see my role as communicator in this environment. But a guy like Whalen doesn't usually pull very many punches, technically. So the Italian banks are in a bind legally and structurally. The EU and politically, the EU doesn't want to solve the problem. The ECB doesn't want to solve the problem. They can't. They can only solve some of it. Germany doesn't want the problem solved, because to solve the problem means allowing forcing the Bundesbank to take on or write down hundreds of billions of dollars in debt, or take on and let Italy default on hundreds of billions of dollars in debt. So the big thing here is the parallel currency that they're talking about, which is effectively a small denomination, zero interest bearing bond, which can circulate against tax receipts in Italy and act as a parallel currency. It'll trade at a discount, obviously, to euros, and in that way we'll get to find out just how much of a discount Italian labor needs to get, the Italian economy needs to balance its books relative to the euro. And of course, once we know that number, there's really no reason for the Italians to stay in the euro, because then we've got data and proof that Italy can't sustain their economy or their budgetary outlays or anything else with the euro price the way it is. Mookie Thief says, buy gold. Name of the stream is Gold, Goats, and Guns, right? There you go. So, in the short term, gold may continue to be weak as we deal with upward pressures on the dollar. But so the next question from Mookie Thief on Periscope is, I thought the whole purpose of the euro was to avoid all that. Yeah, you and me both. Unfortunately, it was never designed that way. The euro is not designed. The euro was never designed. It was never going to be designed. No one ever wanted it to be such a system where all of the debt was consolidated under one central issuer. The ECB, the European Commission, somebody, right? The Treasury of the European Union or the European Central Bank, somebody had to be the central issuer of euro-denominated, quote-unquote, sovereign debt for the entire EU. That was never in the plan. Buying gold and silver as a hedge against inflation is fine. We're still in an extreme bout of deflation. But notice how, as in, we've got asset price deflation and monetary inflation, and that's what's keeping gold at around $1,300 an ounce. So that now the equilibrium price of gold has pushed up towards $1,300 an ounce, whereas after 2008, the equilibrium price of gold was probably $900 an ounce. At least as of right now. To be honest with you, gold is terribly underpriced and should be somewhere around $6,000 to $7,000 an ounce. But we're not going to get there. We're not going to get there tomorrow. More's the pity. I wouldn't mind. That would be great. I would pay off my house. That being said, but that's what's going to happen in the future, because we're going to see inflation in the price of gold as all of the currencies lose the trust of the markets. And what's important to understand here is that what's unfolding in Europe is bigger than the ECB. It's bigger than the Bundesbank. It's bigger than the Federal Reserve. It's bigger than the Swiss National Bank. It's bigger than all of them put together. Not Italy, but everything that comes out of Italy. And then you start adding in Turkey. And then you start adding in Thailand, Malaysia, Brazil, everybody else. You start adding in all these other people, these other emerging markets. And the amount of debt that's going to be unpayable if the dollar rises 15% from here, back to levels that we saw when Trump was elected, would be terrible. Do I think cryptocurrencies will push gold prices? Yes. I think they're going to move in tandem. I don't think one's going to push the other. I think they're just both going to rise as a form of capital flight. And since the cryptocurrency market, relative to the size of the pile of money that has to be moved out of European assets and everything else, the cryptocurrency markets are very, very small. Sandy says, but nothing ever really seems to happen. They keep patching things up forever. Sure. And they have for a long time. But again, it's about timing. And good evening, Buck. How are you? Once, it's like everything else. Confidence is one of those things that everybody wants to continue to believe in. Everybody wants to continue to believe that the central banks have everything under control. 2008, was the first time the central banks lost control of everything and then patched everything up. And they were able, remember, Bernanke was on the cover of Time, the man who saved the world, and all of this shit. And that was capable of pushing things out another full business cycle. In the same way that Mookie brings up to 1929, the first stock market crash in 29 ushered in a decade-long deflationary wave known as the Great Depression that only ended in 1946 at the end of World War II. Tillman asked, did the EU delay the inevitable? Yeah, it has, by continually buying sovereign debt and other bad bank debt and putting it on its balance sheet in the same way that the Fed did the exact same thing. But how much more can we do? Can the Fed raise its balance sheet to $40 trillion? That's the question. Because right now the ECB needs to expand its balance sheet by a factor of 5. Well, no one's not talking about China's huge building bubble, which is what Mookie's brought up. We are talking about it, and I'm going to get to China in a little bit because I've got some interesting ideas about what's going to happen to China and how it's going to affect Trump and the sanctions policy in Iran and Mike Pompeo and all that. But I'm going to hold that back so I make sure that we understand what's happening within Europe. Because look, Italian bond yields are leaping 10, 12 basis points a day now. That's a bad sign. CDS spreads are, let me see what the 5-year CDS quote was today. CDS. Sorry, hold on for just a second. Bloomberg, because I can't get them there anymore. Italy, 5-year Italian CDSs, 141 basis points. This time last week, they were at 97. Buck is asking, will the EU downfall be due to currency or sovereign nations telling them to go pound sand? Bit of both. That's the point about what Italy is proposing here, is basically telling the EU to pound sand. And it's going to be via the currency markets that they look at that situation and say, well, if that's the case, and we're sitting on all of this debt, this $3 trillion worth of debt that the Italians have, who's going to pay for it? How are we going to restructure it? What's going to happen? Who's going to take the $250 billion or $450 billion haircut just as a start? Because Italian banks are probably sitting on 30% non-performing loans, if not more. They're reporting 14.5%, but the numbers could easily be 30 or 35% if you actually use, rational accounting standards and not loopholes that the ECB's written in order to keep the ratings agencies from losing their shit and keeping the lie and the illusion going for just that much longer while they try to figure out what to do next, which is the same thing they did yesterday. Lie, cheat, and steal, and hope everybody continues to go to work in the morning. Because what other option do they have? What Whalen was talking about today is that, the Fed is mispricing inflation and shouldn't be raising interest rates. And I'm like, the Fed needs to raise interest rates, Chris. There's $40 trillion worth of pension systems in arrears thanks to a decade's worth of zero-bound interest rate policy. They need to get the 10-year back up to 6% so that these guys can have a chance or a hope in hell of paying out 8% a year, which is what they're obligated to pay. It's all made up money, kind of like you taking a haircut. Yeah, like me. Yeah, exactly. So, saw a story today from user 13 today about India's private banks carrying a high percentage of bad debt. Of course. Oh, India's central bank was profligate under, not under Modi, under the guy before that. What the hell was his name? Until it does happen, Sandy. It's actually happening right now. I mean, we're looking at a 50-point blowout in Italian CDS spreads in 6 days. That's a big deal. 10 years ago, it was everything was fine. Well, Bear Stearns imploded. Oh, gold hit $1,000 an ounce. Bear Stearns imploded. 6 months later, there was the world economy came to a complete stop. I don't think we're going to see war. I think we're going to continue to see trade war of the kind that we've been seeing for a while now. The problem is, like everything else, is, you know, part of what I do here is I'm going to be early, okay? Because I'm one of those people, and I'm not busting my hand, patting myself on the back or anything. This is what I do. I'm one of those people who can see the way things are going, project the trend within the cycle, and then go, okay, this is going to happen. I need to prepare you emotionally, intellectually, as best I can for that. And if you have enough time to then set yourself up properly, you can be taking concrete steps so that you're prepared, so that when it does happen, you're not caught flat-footed. Because 99% of people are going to be completely wrong. I think the trade surplus is a complete dodge. I have no issue. I have no interest in the trade deficit. I've never have. We have a trade deficit with China because we have a trade deficit with China. So what? Trade deficits don't matter. We design everything, take all the profits here, and they build all the shit over there. Great. Then we buy it all back from them for pennies on the dollar. This is shit. We have, you know, I mean, who cares if we have, you know, balance of trade stuff is so like 19th century. It's like, it's silly. It's all about this, you know, the only reason that a trade deficit per se matters one way or the other is the rate at which the currency has to rise or fall based on whatever it is that the fucking government wants to do relative to its fiscal finances. Otherwise, it doesn't matter. From a workforce perspective, Buck, you've gone over this before. I don't care about any of that stuff. Look. China hasn't put anything concrete on the table. China are better mercantilists than Trump. Trump is just trying to run the mercantilist playbook against China in order to get China to open up its current account and open up its markets fully to allow free flow of capital. I understand what he's doing, okay? And I understand why he's doing it. And I don't really care one way or the other what he achieves one way or the other in this. Because ultimately, at the end of the day, mercantilism is the kind of thing that is not sustainable unless the other person on the other side of the trade wants it to be sustainable. Okay? No. There's absolutely no reason why you should want to net out to zero on trade. The total concept of a trade deficit or a trade surplus is silly. All that matters is that the trade deficit or surplus, all that matters is that the currency will rise and should rise and fall in value as currency flows, as money flows in and out. But it's not a loss of capital. It's just the amount of money. The problem is that the United States can't afford to run a trade deficit. Well, actually, it can't afford to run a trade surplus either, because it runs a trade surplus. It can't issue any debt. If it runs a trade surplus, if we run a trade surplus, Buck, we have to balance the budget. Do you see Trump trying to balance the budget? Do we see any president trying to balance the budget? Rein in spending. I mean, I'd like to see China open up their capital account, but they're not going to do so until they absolutely have to. I applaud Trump trying to get them to open up their capital account in some way. If he has to use tariffs to do so, that's fine. But we don't actually see China putting anything real on the table. Right, and China's underweight. Actually, Tillman, you bring up you bring up the right point, which is that ultimately, at the end of the day, China's got a wage problem. China's wages are rising rapidly. People are moving into the middle class. It's not the same situation it was even 5 years ago, no less 10 or 15 or 20, which is the way we as observers of this continue to look at it. Okay? In Japan, I mean, China was already looking to outsource back in 2012, was looking to outsource its labor at some of its, it was turning around and wanting to like buy cheap Vietnamese and Laotian and Cambodian labor in order to continue to run in order to continue the process of outsourcing until the whole thing, because their wages were rising to the point where they weren't making any money. But what's more interesting than this, and the whole trade thing is kind of irrelevant. The size of the trade deficit is egregious. We have a trade deficit with Germany as well. Right, Asia outsources to Southeast Asia, then and then the Chinese are going to outsource to Central Asia. Just wait till that happens. Okay. What's more interesting than this, and why is our labor worth more? Why is our labor more expensive? Bueller? Anybody got an answer? I'm going to hold on for a couple seconds because I really want you to understand this. This is basic economics. Why is our labor so expensive? Because it's worth more. Now, if we have policies in place that make it more expensive because our high wage earners are people who are so efficient and drive so much value per hour, right? Per hour of labor, then we have the rentier class sucking and adding another 40% premium on top of that to pay for the fucking government. And that exacerbates the difference in wages needed by people to live well and what the Chinese can do it for and what the Chinese can do it for. Yeah, it is simply quality of products. Germany's labor is more valuable than its currency is. That's why they have a trade. That's why they have an imbalance of trade with the internally within the rest of the EU. Italian labor would price the euro at 80 cents. The German labor would price the euro at $2. The euro's trading at $1.17, and Germany gets to pocket the arbitrage. Right? When Germany should have its own freaking currency, and the Italians should have their own freaking currency, and that would normalize everything. What you currently have is a Euro system designed to roll wealth up into Germany through that disparity between currency arbitrage and value of the currency, the arbitrage between the value of the currency and the value of the labor, and sucking the value out of the less competitive markets. So if Trump truly wants to improve the differences between China and the United States, well, the first thing to do is, this is what he is doing, knock back the regulations, knock back the taxes, the corporate income tax, some of the environmental regulations, all these labor regulations, and all of this stuff. Get that stuff off as a function of overhead in order to reprice American labor close to its actual value, what the worker himself is actually producing and earning. He produces this much, the government wants this much, so he's got to work twice as hard to produce this, and then that becomes uncompetitive relative to China and everybody else. That's the issue. That's the source of most of the trade deficit. Okay? Some of it is China's closed capital account and China's mercantilism. Sure. Some of it is some of his currency mismatch. Sure. But at the end of the day, we have higher wages because our guys are more skilled. Period. They produce more value per hour worked. Period. So to why would you go back? Why would you want to rebuild an economy around low skill, first order goods stuff? Not to say that we shouldn't produce things, but we're moving into an age where I was talking to a guy on Steam this morning. There's a revolution coming in production called 3D printing, where humans are really going to be removed from the actual production of a great number of things. And if you look at modern factories and modern production lines, the whole idea is to get the human off the line because they're just sources of error. And when you've got something like 3D printing where you can print individual widgets to design spec on the fly, I mean, there are guys out there 3D printing freaking houses, for Christ's sake. How many low-skilled laborers in the United States does that quote-unquote put out of work? Building better houses because they can build the freaking things out of concrete as opposed to 2x4s. I mean, that does is it frees up the capital to bring those guys and those people into different jobs, whatever those jobs happen to be. But there's always a dislocation in terms of the labor. So at that point, the value of some labor is going to rise and some labor is going to fall. God Aloha asks the question, to knock down our costs, don't we need to pop the housing bubble and the rackets in healthcare? If we go to war and suppliers are enemies and we don't build basic things, now I'm not saying we shouldn't build basic things. I'm not saying that we shouldn't produce. Tesla's a special thing, Sandy. Okay, go look at Ford. Go look at a competently run company like Ford or Toyota, and they'll show you how to build cars with robots. And still, they have people on the line error checking everything because they still need to be there. And those people still take pride in their work. They just no longer actually put the screws. They no longer run the screwdrivers. They now do all the other things that require more brain power that computers can't do for them. So, I mean, 95% of this argument is really just the buggy wagon, the wagon and the wagon wheel makers versus the automobile. It's the same thing over and over again. User 13 says, our problem is we're taking the skilled people out of design and outsourcing that to H-1B types who are doers and not designers. Yeah, I mean, there's a lot to be said for. I mean, I've talked to Asians about this. I've talked to people about this when I worked with worked with a guy over in Vietnam. We had many a long evening discussion about this, and that in the end. And he's like, and he's Vietnamese, and he said, I don't mean to be rude or anything, but Asians aren't nearly as creative as Europeans are. We're really good at aping things, but we're not really good at like making new on our own. We're good at imitation, but we're not good at innovation. Is UBI? I'm not sure what you mean by that. User 13 asks, is UBI inevitable? I'm sorry if I don't know what that means. So just understand that China is going to open up their capital account as they need to. It is incumbent upon us to look at the situation. Yeah, we can put some pressure on them. Suzanne Johnson says, if government would stay out of it, creative destruction will work it out. That's the theme here. That's the theme. Universal basic income. Is it inevitable? I thought that's what you meant. I wanted to make sure. I don't want to get off on a Jordan Peterson tangent. That's discussion for another night. Peterson makes the very credible argument that there are not jobs for anybody under the IQ of 83 in this country anymore. So what do you do? I don't have a good answer for that right now. It's something for you guys to think about. What's going to happen over the long term is the following. The Chinese are going to concede to trade, loosening trade restrictions with the United States in order to get the geopolitical wins it wants. That's the important thing. Okay. That's the important takeaway. Every time China gives in a little bit on trade, understand that they're going to get. Well, no, the problem is that you simply, the division of labor today is just simply so nuanced that there will never be jobs for those people anymore. No, I think technology is going to has already obviated and automated so many of the very menial jobs. UBI is effectively welfare. But China, let's get into what this is really about. China will give in on trade issues. Trump will will call these wins to the high heavens while he has to give away the farm geopolitically. He's going to lose on geopolitics in order to get any wins out of China on trade. So you'll note that North Korea is going to get what it wants in these talks, or Trump will not get shit on trade. Not anything tangible. China hasn't put anything tangible on the table. They've waved their hands and said, "Yeah, we'll do something. We'll agree to substantial cuts." No numbers. Because they're not going to say anything tangible until Trump goes to Singapore and sits down with Kim. Because they're not going to do a fucking thing until Trump signs the order to close 6 bases on the Korean Peninsula. Exactly, Suzanne. Describe a geopolitical loss. I just did. You want you want us to cut the trade deficit by $50 billion? Great. Close half. Yeah, agree to 6 base closures in the next 3 years. And 6 more in the 3 years after that. You can leave a light response garrison for training and logistics purposes. That's it. China will back North Korea in these talks in that way. What do you mean? What does that mean to us? Well, if you want the empire gone, look, it's a geopolitical loss because we no longer have control over the situation. We, as in the government, it's a geopolitical loss for the empire. We're not pro-empire guys, so to us that looks like a win. It is a win, but China's going to win that end of the bargain. Trump's only going to get $50 billion worth of trade relief, as opposed to $200 billion, which is what he wants, or $300 billion, and North Korea to completely submit and allow Americans to come in there and build power plants and LNG terminals and everything else and shut Russia and China both out of the freaking market. That's what Trump wants. Trump wants all of that and a bag of chips. He's going to get $50 billion in trade concessions. I'm just telling you, I didn't say it was bad or good. I'm telling you that this is going to be a geopolitical loss. Okay? That's a loss in geopolitical terms. It doesn't matter whether I like that geopolitical loss or don't like that geopolitical loss. As it is, where we are today, that's a geopolitical loss. In the game of geopolitics, North Korea right now is a loss. Is it a loss we should take? Yes, it's a loss we should take. Do the punters in fucking Washington think that way? No. Do the neocons think that way? No. Does most of the rank and file in the Republican Party think that way? No. Does most of the rank and file in the Democratic Party think that way? No. Will John Bolton's mustache curl itself over that outcome? Yes. And once he loses there on North Korea, do you think that's going to go over that well in Europe and Iran? What happens when Iran stands up to the sanctions? What happens when potentially Merkel stands up to him? And this is what I've got that's what I'm going to lay out for you guys. And and I'm going to write an article on this in the next couple of days. What happens here? Now, this one's going to blow your mind. Yeah, he did. And he isn't acting like that. Did we not fight about this last Monday? That I told you that 6 weeks ago, Trump embraced Netanyahu? A geopolitical loss, as defined, user 13 defined it for us. A loss of prestige and the ability to influence global events in the directions that we want. Anything that curls Bolton's mustache is a win. Agreed. Agreed, completely. So, here's the thing that's going to blow your mind. Ready? Sit back for this one. I'm going to do the same thing. I'm going to do it this way now. I'm going to bring the camera down a little bit. We're going to get a little bit more comfortable for this one, because this one I've got to kind of lay out. Ready? China needs to devalue the yuan. They need to open up they need to open up the yuan floodgates, because, as Mookie was talking about earlier, China's got a huge debt bubble that they need to deal with, and it needs to be monetized in some way. They have been, for quite a while now, running with a stronger yuan policy. I've talked about this in the past. I've written a couple of private blogs on the subject for my subscribers. The yuan has been trading, hit a low of like 6.1. Trump's out there calling them currency manipulators. For fuck's sake, dude. The yuan has been on an appreciation curve versus the euro, versus the dollar now for years. I'm not really watching most of the comments, so if you're asking me questions, I'm not listening right now. I have to do this without listening. So I move back, because now most of the comments are out of focus and I can't read them. So, talk amongst yourselves. I've got stuff to talk about. So now, and then DTF comes in with something actually they don't necessarily. Yeah, they did for a long time, but they have been raising the value of the yuan on versus the dollar for years now. They only did shock devaluations whenever they needed to stabilize their banking system or give the U.S. a warning shot, okay? Which they did with the shock devaluation after the taper tantrum in 2015 or 2014. It's not really new, but I want you to think about it and how it all ties to everything else. So China needs to devalue the yuan. And I'm not talking about by a little bit. I'm talking about by a good 10 or 15%. But they also need to expand the yuan base by something like 50 to 70%. Circulating yuan. If they want the yuan to act as a trade settlement currency, right? And they want the yuan-denominated bond market and sovereign debt and Chinese sovereign debt market to expand, they have to expand the crap out of the yuan. They have to expand the crap out of their money supply. Okay? And so They did that to remind everybody that they still control the value, ultimately can control the value of the dollar by pushing it wherever they want to. That they don't have to play nice if they don't want to. That they had been playing nice to that point while the United States was in trouble. But when Bernanke starts talking about tapering QE out of the blue and their markets get hit by 60% over 3 months, I got news for you. Over a 3-month period, I got news for you. They're going to push back. Okay? That's just the way it is. This is all fair in love and financial war. Okay? I take a neutral tone on this. The Fed was finally starting to end QE, which is a good thing. It had adverse effects on China. China turns around, does a shock devaluation to remind everybody not to move too quickly because of not only the stress on emerging markets, but then how it will blow back on the United States. Because remember, we're all in this together in the global economy. Nobody over here gets to act unilaterally and not have it affect somebody else. Especially, but we have this myopia that we're still the world's most powerful economy. We have the world's most powerful currency, and therefore we can do what we want, and everybody else has to deal with our policy. That's not quite the way it works anymore. Okay, so I'm just talking about this from China's point of view. Take your own blinders off for just a little bit. Stop thinking about things for just a little bit. Stop thinking about how this affects the U.S. and flying off the handle. Just think about structurally what the Chinese need. They need, if they're going to become a trade settlement currency, even regionally, yuan liquidity has to rise by a lot. But they want to do so without causing massive trade disruptions through having massive currency effects. Meaning they want to devalue the yuan by 10 or 15%, or they want to raise the supply of yuan by 50 or 60%, but they want to do so in such a way that, like a large institutional fund manager wants to buy Apple, they want to do so without moving the price. Okay? So that's where we are, and they can see where the markets are right now, which is that the dollar's put in a very substantial bottom, and we're starting to get it, and we're starting to get a rise in the dollar, mostly because of what's unfolding in Europe. Yes, China's having a little bit of effect on this. They did lower the reserve ratio requirement the other day, last month, by a 0.0. Hedge had a great article which shows that was maybe the catalyst for the shift. But at the end of the day, at the same time, it was that time. The dollar went through an 18-month down wave. It's time for it to get off the bottom and then start to rise again. The problem now is whether or not the dollar is going to rise too fast. And if it rises too fast, it will be because of the emerging market stress that it creates, both in Europe and in emerging markets around the world. Now, at the same time, Trump is trying to run a trade protection scheme, a trade war against Europe in order to get them to agree to increase sanctions against Iran to the point of trying to destroy Iran's economy. Correct? Pompeo came out and said this is basically exactly what Pompeo came out and said today. Now, listen very carefully. All of these things are connected. Trump is trying to threaten, shake down Merkel to stop the Nord Stream pipeline by threatening her with 30% steel and aluminum tariffs. The euro is starting to roll over. The dollar is starting to rise. All China has to do to support Merkel is push the dollar a little higher, a little quicker. Now, all of a sudden, the euro cracks from $1.17 to $1.13, $1.10. Sovereign debt crisis starts to unfold in Europe. They start to have to deal with the fact that they've got hundreds of billions of dollars in Italian debt that they can't deal with. The Italians turn around in July and say, you know what? Fuck you. We're no longer voting for extending the sanctions on Russia. We want normalized relations with them. Now, The Europeans try to stand up to Trump, but Trump is going to sanction everybody, right? They're going to sanction the world. Period. Do what I say, or else I'm going to sanction the world. Well, if the dollar's rising really rapidly, one, our debt servicing is rising. A measurable percentage of the budget is rising rapidly, especially as Trump has just added a tremendous amount to the deficit for this year. Two, the Chinese then turn around and goose the yuan a little higher. Not, a little. They goose it a little lower. So as opposed to going, say a tenth of a yuan a month versus the dollar, it starts going at 0.15 or 0.2. So all of a sudden, as opposed to 6.4, it's now 6.6, and then 6.8, and then 7, and then 7.2. And as opposed to stopping at 7.2, they go all the way to 8. That's going to fuel a super cycle rise in the dollar over the course of the next 6 to 18 months while the Europeans are dealing with all this shit. Which, at the same time, as the euro's dropping, Angela Merkel going to turn around and tell Trump to go stuff his 30% aluminum and steel tariffs. Because let's do the math. What do you think the input costs for steel and aluminum are on your average $50,000 BMW? Or average 60,000 or 50,000 euro BMW? $3,000? Slap a 30% tariff on that. He's going to slap a 30% tariff on the final price of the car. Fine. So this $50,000 BMW, 50,000 euro BMW, which right now is going to come into the United States at $60,000. Okay, and then he's going to slap a 25% tariff on top of that. So now we're talking, 25% over that, so $75,000. So this 50,000 euro BMW is going to be imported into the United States at $75,000. Correct? That's only if he does it on the final vehicle. If he does it on just steel and aluminum, what? He's going to raise the price from 3,000 euros to 3,800? Who gives a shit? If the euro drops by 10%, that absorbs the cost of the steel and aluminum tariffs. In no way, manner, shape, or form could under those circumstances could Merkel not absorb that and BMW not give a shit. Because here's the gig. Start with that 50,000 euro BMW. Cost of goods sold goes from input COGS goes from X to X plus 300. Multiply 300 by 3.3. Call it 1,000 euros. Or 25%. It would be 600 euros. Call it 2,000 euros. So now they have to sell that same car for 52,000 euros as opposed to 50. Okay, so we'll come over to the United States. It would be $64,000 as opposed to 60 at $1.20. But what if the euro drops to 90 cents? Now all of a sudden that $64,000 BMW to the average American buyer is $45,000, or do the math. Figure 30% haircut, 20% haircut over so it would be $42,000. BMWs would be cheap. You'll see 0% financing for 7 years and $5,000 cash back on a brand new BMW 3 Series. Got news for you. The tariffs won't do a fucking thing under that scenario. That's what we're staring at. And the Chinese have the lever on how bad that is. They have the lever right now. That's real power to undo all of this sanctions bullshit. And if the Europeans can figure out a way to launder the money through third parties to get the money to Iran for the oil and back again, who cares? At the same time, as I've mentioned multiple times, the Chinese can just up the percentage of oil that they buy from Iran. Iran gets yuan, newly printed yuan, because the Iranians are putting those lots up on the Shanghai exchange in yuan on that futures market, which is going great guns, by the way, and doing fantastic business. You understand? And if you don't think the Chinese are thinking in these terms, you're crazy. Because that's exactly what they're talking about. That's exactly what Putin just told Merkel. Don't worry about the sanctions. You got bigger problems. Let the euro fall. It needs to anyway. If you want Italy, and as the euro falls, it helps to solve Italy's sovereign debt crisis, because now they can restructure the debt. Why is Suzanne? I guess you're asking, why is Iran oil so critical when there is so much oil? Because the Saudis need $90 a barrel oil, and they want 1 million barrels of Iranian oil off the market in order to maintain $90 a barrel oil, in order for them to quote unquote remake their society. User 13 brings up on YouTube, of course the Chinese are thinking this way. They're not ivory tower types, as I've mentioned multiple times, thanks to Martin Armstrong. Remember, everybody who works at the PBOC has worked a bond or commodity pit in the United States and Europe. These guys know how to trade. They're not academicians. And if at the same time the U.S. betters trade with other emerging markets to significantly reduce China's trade share, how are we going to do that with a rising dollar? Now we can export our strong dollars to invest overseas. That's what we'll do. That's what we should do. As opposed to trying to weaken the currency to sell first order goods overseas. Who gives a shit? That's the problem with mercantilism. It actually hollows out the economy. It undersells your labor. And it pulls forward, and it pulls from the future sales that you can't sustain, because you can't sustain it because you've underpriced your freaking currency, and then thereby you've underpriced your labor. It never works. It works in the short term. It's really good politically for like 6 to 18 months to get a guy elected, and then after that, the whole thing collapses. The only reason that the Chinese have been able to run their mercantilist policy for the last 15 years, and Trump is right about this. Again, I'm not completely against what Trump is trying to accomplish here. I'm not. I just don't really agree with the methodology. Because he doesn't have and I've said this from the beginning, he's going to try and run this. I mean, I've been saying this for 2 years. He's going to try and run all of these. He's going to try and run all of these schemes that he's been running, all these scams, all these schemes, all these ideas, all these. And I said that he's going to be doing so from a position of weakness. He's trying to play a crappy hand the best way he can. And I applaud him for trying. Unfortunately, he's up against people who are better than him. And when you have good cards. So what do we have? We have we still have a very, relatively speaking, we have some incredibly deep and important financial markets. We still have an incredibly vibrant division of labor. We still have a very professional. We run businesses unbelievably well. We're very good at it. Okay, we have an unbelievably professional managerial class and executive class. Unbelievable in this country. The average entrepreneur in the United States does a better job of running the country than most CEOs of small companies in any emerging or frontier market. Now, fucking people know how to run money, how to run a business. I mean, most entrepreneurs in this country have an MBA from a halfway decent school. And if they don't have one, their partner does. You know, I mean, you got to see the whole thing. You got to see the whole picture. You can't just like look at one little bit of it. I know that's frustrating for people to listen to sometimes, but it's the truth. So it's going to be a very interesting few months here to see how all this stuff plays out. I don't think we're going to see anything bad happen in the markets between now and when Trump and Kim sit down to talk in Singapore on June 12th. I think it's going to be pretty much, they're going to try and hold everything together for that, because the market is kind of handicapping that could fall apart. And there will be a peace dividend if an accord occurs. There will be a peace dividend. Markets will probably rally. People will stop hoarding cash for a couple of days. But right now, markets to me look like everybody's hoarding cash. Zero Hedge ran an article today. I got a link to it down below and I tweeted it out this afternoon the minute the European markets closed this afternoon, the equity markets dropped. The Dow dropped 200 points right after the European close at 11 o'clock this morning. Why? Well, because we've got the beginnings of capital flight out of Europe, and the European investors are bidding up American stocks on European exchanges. The minute the European exchanges close, that's the source. That source of the buying, which drove stocks up before 11 o'clock this morning, saw a dip afterwards, and then we traded sideways for the rest of the day. This is exactly what I've been talking about for a year and a half. This is what Martin Armstrong's been banging his shoe on the table about for 10 years. That the cycles work was telling him this 10, 15 years ago. That this is the period of time when all of this is going to start to occur. We had gold flat today. We had Italian bond yields up 12 basis points. We had a flattening of the U.S. yield curve right on time. But we were talking about this yesterday. How emerging market volatility is going to drive up the short end of the U.S. yield curve and keep the long end at flat, if not negative. And we're going to get a flattening of the yield curve. And if we start to see a spike in short-term rates in the U.S., that means that we're looking at real, honest-to-God dollar illiquidity across all markets. What is the impact if the U.S. allows oil to drop back to, say, $30 a barrel? DTF asks from YouTube. I don't think oil is going back to $30 a barrel until we get towards the peak of the dollar super cycle. I'm not even sure we'll ever see it that low again. It's possible, but a dollar super cycle is going to set off a tremendously strong deflationary wave. The impact of the U.S. will be irrelevant. Most of the wildcatters out in the Permian are with the latest technology and some of the new technology that's coming in offshore drilling and everything else will be able to pump just fine. It won't be fun time to pump at $30 a barrel, and there'll be a lot of companies will go bankrupt, and there'll be a lot of reconsolidation and reorganization within the oil industry. But we can survive 35. We certainly can survive 35, if not $40 a barrel oil. Whether we ever get back down to 30, I'd say at 40, it's not a big deal. They're not making any money at 40, but they're not going broke either. I mean, if whoever's pulling, remember, there's no we in this market, okay? And Anwar has been opened up. Has the exploration started? Have the blocks been sold off? Are they pulling the oil out of the ground? How are they going to get it out of there? Have they built the pipelines to bring it in? Have they built the terminals to bring it in? It'll take 8 to 10 years to bring that up to speed. It'll take an entire cycle. Okay? And even if they do start pulling it out of the ground at $20 a barrel, by the time they do, the super cycle high in the dollar will be over, and then we'll be dealing with our own version of the hyperinflation that the Europeans are going to go through first. Remember, everybody's going to go through a hyperinflationary event. I don't know about hyperinflationary, but certainly a majorly inflationary event. But it's going to happen in a specific order. Emerging markets in Europe, Japan, then us, over the course of a 3 to 5 year period. That's the general big theme. Okay? Has to happen in that order, given the way we have to be last, because we're still the world's core economy. And over the course of this period, everybody who removes itself from the dollar as much as possible will be insulated from the worst effects. They won't get out of here alive. They won't get out of here unscathed. China's going to go through China's going to take a hit. Russia's going to probably take a bit of a hit. They're mostly de-dollarized at this point. They don't really give a shit. Obviously, it's going to be tough times for Iran. Don't get me wrong. It's not like Trump's policy is not going to be harmful to Iran. It's going to be terrible. But is it going to get what he wants? A low probability of that. And if I'm wrong, I'm wrong, but I don't think I am. Because I really don't think that these guys have been sitting here for the last 2 years with Trump threatening fire and fury and everything else and bellying up to Netanyahu and the rest of it. Like, they haven't been game planning for this. Like, they didn't have they didn't war game this out. Of course they war game this out. They're the Persians, for fuck's sake. Along with the Russians and the Chinese. Never underestimate your opponent. Okay, anybody else got any other questions? I think we're going on just under an hour at this point. So, I never did get to talking about the Democrats. So let's talk about them for a minute. Now let's add the Democrats into the mix. Let's add the implosion of the Democrats. Now, I haven't been following the whole Mueller, Rosenstein, IG, all this. I haven't been following it that closely. I will be honest with you. Following it just closely enough to know that it's all falling apart. I don't really give a shit about the particular details, the particular legal details and all this. I mean, it honestly, it's like watching paint dry because, again, I know where the story ends, so getting there is really not all that interesting. But there's a very interesting takeaway here. So we got to pretty much confirm now that the Democrats, the DNC, mobilized multiple agencies within the United States government to spy on and try and entrap first a political opponent and then a sitting president. But we're not talking about, we got a memo here, we got an email over there, we got this. No, we now have them shitting bricks publicly. Sally Yates, Brennan, Clapper. Holder has come out of retirement to say, hey, you want to stay within the DOJ. All they can do is, User 13 saying their election strategies are more important than telling. They're going all in on identity politics because God forbid they go on anything else. It's telling you that this thing leads to Obama. If they go in full force on identity politics, it's because they're trying to paint the Republicans as anti-black because they know they've got Obama dead to rights. Because here's the thing that I was discussing with my partner this afternoon. And that is the following. Okay. The FISA memo is going to wind up burning somebody. Someone's going to have to fall on their sword for this thing. The most likely candidate is Samantha Power because she's a true ideologue and she'll do it because she's an idiot. She's also white. But what happens if Valerie Jarrett rolls over on Power? They don't like each other very much. And they've got something on Jarrett too. Once this starts to go, do you really think that Holder and Susan Rice and Loretta Lynch and the rest of them, who are not part of the club, mind you, they're not part of the club, guys. This is not. They're part of the club. Well, Debbie is, but even she's expendable. And the Awans. None of these people are part of the club. Oh, and then Putin throws out the KGB file, which proves that John McCain was a traitor and got our guys killed. And was working as a traitor for his party, the guy they ran for president against Obama. Acting as a traitor to his own party to help the Democrats sabotage the Trump presidency. This is a political cataclysm that trumps, all puns intended, just about any tectonic shifts south of the supervolcano in Yellowstone exploding. And I know I'm tired of it. Call me when they've got convictions. I'm pretty much for the most part there, but you have to look at this now. 3 months ago, I was like, there's no freaking way that Obama's going down. But if these guys roll over and start implicating Clinton will absolutely roll over on Obama. Because Clinton and Obama hate each other with an absolute purple passion. They hate each other. These people will all eat each other, and they will all turn on each other like fucking piranha. And they're not most of them aren't part of the big club. And so therefore, there's no parachute for them. There's no, well, don't worry about it. You'll do a couple of years and then we'll take care of it. Don't you worry about it. We're talking about full on, everybody goes full on fuck you to everyone. And they're shitting bricks right now. And you can see it. They're in full on damage control mode. Containment has been breached in a way that we have never seen before. And I just, to me, this may really start to get very interesting very, very quickly. And I know it seems like this shit takes forever. It does. It's Washington. It does take forever. But don't for a minute think that if Trump has got these guys dead to rights, that he doesn't push this for the midterms. Tillman brings up an interesting point. Trump will take a deal to get a no-hassle re-election not convict. I don't think it lasts that long. I think the whole thing blows open before the midterms happen. For those 7 of you on Periscope right now, I'm not going to repeat what DTF just wrote on YouTube. Because I'm not going there tonight. User 13 says, look, they're trying to front run it now. This tells you that they're weak. They're out there saying that Trump is attacking the institutions, that he's attacking the rule of law, that he's doing all that. It's all nonsense. All bullshit. All bullshit. All bullshit. It is. This is bad. They're weak. It's awesome. Things to remember. They never thought she'd lose. I don't think Trump knows everything. I think Trump knows a lot. Maybe he knows everything. I think that at a certain level, and one of the things that when I was discussing with my partner earlier in the day, I immediately flashed to this bothers me because Trump could wind up walking away from this whole thing scot-free with no opposition and everything else. And that tells me, that scares the crap out of me, that if he's gone completely loony around the frickin' bend with the neocons on foreign policy, then he's going to push even harder because now he won't have any opposition to hold him back. But then again, the opposite could be true as well, which is that while that's unfolding, foreign policy takes a complete backseat, and he's able to get some cover to go have a couple of meetings with Putin and work out a deal in the Middle East. Especially if this is 6-7 months from now, when Iran's not when they finally have the data that says that Iran's not going to fall to economic sanctions. All right, we'll see, but that was interesting to really think about that. But the whole situation with China and how they can influence how Merkel responds to all of this is very, very interesting, and you should keep an eye on that. All right. Yeah, buying popcorn stocks, not a bad idea. Speaking of popcorn, I'll be late on Friday night. We're going to see Solo at 4:30. It's a 2.5-hour movie. I may be home in time. I may not be. And I'm not going to want to talk much geopolitics. We're going to be talking Star Wars on Friday. I have an interesting line on that I want to discuss. Between now and then, I'll probably do a short YouTube on my growing frustration with the right-wing SJWs who are masquerading as Star Wars fans, as outraged Star Wars fans. And I think I'm going to discuss that later during the week sometime. So I'll give you a review of Solo when I get home Friday night sometime. All right. You guys take care. You have a great evening. We'll talk soon. Thanks for all the great questions and all of that. If you like what you heard tonight and you're new to the thing, please subscribe to the YouTube channel down below. Really appreciate that. Moreover, please like this and share it with as many people as possible. It really does help. Moreover, if you like what you heard tonight, you can sign up for my Patreon. Support me on Patreon. Patreon/goldgoatsandguns. You guys have a great evening. Talk soon. Keep a stick on the ice.